All right, in this video, we're going to go over Fibonacci basics. And Fibonacci is one of my favorite ways to trade because there's very little margin of error and it gives you a way to where you can look at the markets and a chart in a certain flow. And what is Fibonacci? Fibonacci is basically a set of ratios, mathematical ratios that correspond with different things in nature and different things in architecture and how the human eye see things and how nature grows and how that applies to life in general. You can take these Fibonacci ratios and also apply them to markets and charts. So, there's one universal language in the world, and that's the language of mathematics. You see how maybe like you look at your fingers have a certain Fibonacci ratio. If you look at different things in nature, which we'll get into, they comprise of a certain ratio, and that is called the golden ratio. So if we look at the golden ratio, like I said, makes up a lot of structure in nature. The golden ratio, to simplify it, is just like pi to where it goes on forever. But to simplify it, it's 1.618. So if we go here, we look at just a couple aspects of the golden ratio. This probably looks like a bunch of gibberish. It still does look like it to me, but the whole point of it is I want you to see this shape right here, this square. And basically, they're saying if you arrange the components of the square and do a mathematical ratio of them, each one of these components, no matter which way you do it, is going to equal out to be this ratio of 1.618. You see how it goes a little bit further. And it's a sequence that also comes with Fibonacci. So the golden ratio is one thing and Fibonacci is another. And this is how, it comes together. So let me show you examples because, I'm pretty sure this looks like gibberish, but there's going to be something that you recognize here. So if we look at this right here, that spiral, you see how the shell makes a certain shape, a hurricane makes a certain shape, the wave, the flowers, the rose petal, the galaxy, your fingerprint, how grass lines up, how a horsefish, a seahorse is lined up, and you look at all these different examples. And now let me go and show you the mathematical component to it. This same shape is this. That same shape is this right here. So one is the spiral version of Fibonacci, and then this is the square version of Fibonacci. So you see how the nature lines up. It's just you can literally keep going as far as example after example of Fibonacci. This is the Fibonacci sequence used with how a tree divides, the Fibonacci sequence within the Mona Lisa photo, the Fibonacci sequence within your fingertips, the Fibonacci sequence with the structure of your face, the Fibonacci sequence with the body of a dolphin. All of these follow the golden ratio. So in your ears, the way the pyramids were built, everything follows that golden ratio. If we go here, the human painting, Pantheon. I can literally go on and on as far as example after example, especially when a galaxy, the way the galaxies are shaped, follow the Fibonacci sequence, there's something to it. So of all these things in nature, whether it's built things, inanimate things like shells, whether it's waves, hurricanes, if all these things line up, then you should be able to apply this to a chart because this is something that, I'm not like a spiritualist, but this is something that's just real. Mathematics is real when it comes to how things are built. Things look right when they're in a golden ratio. So with our architecture can do this unconsciously because the laws of nature apply in people's perception. So even an architecture can apply the golden ratio to their buildings just simply because it fits with nature. So if all of these things happen, it can also happen with trading. So if we look, and that's the reason why I highlighted 61.8. I want you to always, pay attention to that ratio when you're putting them on the charts. And that's basically what Fibonacci is and why it works. The Fibonacci is just that number sequence that everything lines up with. So how to trade Fibonacci. So if we go to the charts right here, and I'm just going to pick one at random. So we're use here. So to use your Fibonacci tool, you're going to look for this symbol here called Fibonacci retracement. And you're basically going to take that Fibonacci, and if it's in an uptrend, you're going to start and draw it from a low point to the high point of the market, or of a particular swing in the market, not necessarily the market, but a particular swing. Let me get the old one off. There we go. So the reason this is important is because every market, has their higher highs and lower lows, and they have their swings in the market. So if we look here, we have our higher highs and lower lows. And then you have the swings in the market. So these are the swings. But there's pullbacks within those swings that separate the swings. And those pullbacks or those corrections oftentimes line up with a Fibonacci ratio to where you can plan out extra confirmations to a trade. So if we look here, we have this swing low to this swing high because we're looking for a potential pullback for a buy. So you see here, the markets really respect the 50% mark of it. So you see how it pulls to the 50%, which is one of the major ones as well, but not as major as the golden ratio, but it pulls to the 50% and it continues forward. If we look at this same thing here, this whole move, see how this move from B to C that I put right here? If I take a Fibonacci, I line it up right here, they're going to respect a certain point in the market. And how do you know which ones are respect? We'll get into that, but they're going to respect a certain point in the market. So you see how in this particular swing, so this right here, this particular swing did that. It basically followed the 78.6, which is another Fibonacci ratio. And if you look further into it, if we pull this 78.6 back, not only did that swing follow it, it also followed it previously. So that 78.6 had major respects to it, multiple respects to it. So you see how we go here, you see how that broke a retest, that found support on that. And they just line up, see how this perfectly broke a retest here. You had this from here. So these points are followed multiple times. Even we go further back, if I pull it even further back, 78.6, the market's closed right there. And we can just leave it like that for now. But the whole point is that you can use this tool as a measured point in the markets. So how do I particularly trade it? Is that I like to see what is the trend in the market, the major trend, and I see this big swing here and see how fast it went down. And I'm like, okay, we're in a downward trend. We're in a downward major trend. Like, especially if you're doing swing trading, this is how you would do it. Then from that point, I would look to see if there is a Fibonacci ratio that also lines up with a zone, a price zone in the charts. So I see here that price had basically respected this level multiple times. And even though you see this here, the way you know it's still respected is because it takes a strong candle to break that zone. So it took a strong candle to break the zone, a strong candle to break the zone. And then for weaker candles, they respect the zone because they're not strong enough to break it. So I see that this is a good zone, and I would draw my Fibonacci out. I see that it's also lining up with the 78.6 at this zone. That's the strongest zone in the area. So that's just more confluence. And then I wait for price to show me that it's recognizing that zone. And you start to see these wicks. You see that wick, you see that wick. So you know that price is respecting that zone. So that could be a potential area to get into the market going down. There's something else also with Fibonacci's. Fibonacci's can not only find potential areas of corrections and pullbacks, it could also find, zones just like you see here. If you look at, if I delete this one so you can see easier. If I line up boxes with each Fibonacci, you see that price has different levels they respected, but some are more significant than others. And you'll learn this as you use this tool more. But I want you to see how price has correlations in these zones. But that's the second thing that a Fibonacci can do. The third thing is that it can also point out areas where you can see a potential reversal in a smaller or bigger trend, or a point to where you can maybe take profit on a trade. So if I go back to this Fibonacci where it was from here to here, from here to here, and I use something called a Fibonacci extension. Fibonacci extension is basically a point in the market to where the market might have a perfect touch or a respect or rejection off of that market and potentially change in areas. So if I'm looking at this swing up, the original one we had here, I'm looking at this swing up, I see that it came to a negative 27. Negative 27 is a Fibonacci extension point. So what usually happens when I'm looking for a potential place where the market might turn around or do a reversal is I'm looking for Fibonacci extension points. So you have Fibonacci retracements, which are anything between 0 and 1. And then the extensions are past the 0 or the 1 point. And, I can get to some advanced stuff, but this video is just to bring awareness to how powerful a Fibonacci could be. So if I look here, I see that this retracement here that we looked at came to the extension point and then turned around. Now, if I look, say if this is continuing down, I don't know if it's going to continue down, but let's say it continues down. And I'm looking for the extension point of this B move to this C move down here. You'll see it. So this C move here. Just move that to the side. So basically this point here. So if I'm looking at a potential point where this trade, say if I place a trade here for a swing move, like a swing trade, I place a trade here in this area, and I'm looking for a point to where maybe I can start to take profit or be complete with that trade, I could look for a Fibonacci extension. I'll look for the -27 or -618, which is another Fibonacci extension. So let's see if it continues down. So it continues down. You see how price comes to that 27 level? Comes to that 27 level. And let me actually bring this to this point so you can see how things line up. Comes to that 27 level. That was the lowest point. So let me actually adjust that. Did I do it correctly? Nope. Redraw it. Oh, there it is. But it comes to that 27 level, and then it comes back. So I just want to show you how prominent Fibonacci is. So let's delete this so that doesn't confuse you. So you see I have one Fibonacci drawn from this B point to this C point. It comes to the 78.6, and then it goes down to the -27, which is the extension. So with extensions, I'm looking for take profits and reversals. Those are what you use extensions for. Goes down to the extension. So let's look here. If I take the Fibonacci from here to this extension, which is the next swing, and don't worry about understanding this. This is just making you aware of how the charts line up. You know, you want to see the bigger picture. I know this is a basic video, but always I'm about seeing the bigger picture, opening up your mind. And then when you see it again, when I do a video explaining this, then it's going to click. So that way you learn faster. So this Fibonacci extension part and Fibonacci confluence or alignment, you know, this is just a part to where I'm making you aware that this is real. So let me go here. I already drew it. Okay. Let me bring this Fibonacci here. There we go. Bring this Fibonacci here, and then let me change it back to the way I had it. So defaults here. 1 second. All right. Those. There we go. So we see here that on this chart, it follows the 50. It goes from here to here. That's also the 27. The 27 itself is the next swing from here to here. So that's the end of the swing. So you were able to measure out the end of the Fibonacci extension from this point to this point, measured out the end of a swing all the way another week in advance. So it lined up a whole nother week of trading opportunities from the Fibonacci that you drew over here. That's the power of Fibonacci. So if you look here, we drew this is another swing. So that's why we're drawing another Fibonacci, because this is another swing. You always want to measure the swings with Fibonacci, these long moves. That's what you want to measure with Fibonacci. So as this is going, you can see that, you know, you already see the answer to the trade here, but let's just say that that didn't happen and we just measured this. So we just measured that. And I'm looking for a point to where I see that the trend is ended here, like the market is going back up, but I see that It's still in a downtrend, but I'm looking for another potential entry to continue selling. So here's what I would do. Let's delete all this so this is cleaner. So here's what I would do. I would look for a point in the market where there's a lot of respects in the market. And one way you can do it is you can maybe put a line here and just line each up with each Fibonacci up to see which one you like better. That one's pretty good. You want to see which ones has the most respects. So you see that the 50 has has a good number of respects, and also the 61.8. So my entry, like especially when there's 2 points that are next to each other that have the most number of respects, and respects just basically mean where price does this, where it has these wicks. There's these wicks going on with it. There's breaks and retests going on. There's support going on. So you see there's support here. So there's a lot of data points at that level. A lot of data points. And I'm just kind of counting, like once you get used to this, you can kind of just see it with your eyes. You don't have to, mark each data point to where the market, respects or turns over or stuff like that. But I see that one has those data points. And then the 50% mark has these data points here. So they both have a lot of different respects in the market. If I was to extend that out, let me actually do that so you can see it. There we go. So a lot of different wicks in the area. That just tells me it's a strong zone. So I see that both the 61.8 and the 50 have the most number of data points in the zone, thus making it an area to where I would like. Even though this one looks pretty clean, this only has maybe 1, 2, 3, 4, 5 data points. Both of these have more than 5. So these two areas are the stronger areas. So what I like to do is I like to create a price reversal zone from this point. So in this zone is where I'm looking to place a trade. I'm looking for price to respect either one of these zones. And then what does price do? It goes up, goes right into the zone here. And as soon as it hits that zone, it makes its way down. Makes its way down. You would have had a good trade there, good winning trade, and that's it. So this last part, this is just something to make you aware. I can go deeper, but there's going to be another video for more advanced stuff. So definitely rewatch this video because I know I put a lot of information into this video, but watch until you understand it, and definitely make sure that you're winning as many trades as possible, because this is something that you can actually do to find a lot of good entries in the market.